and welcome back to Prime Playbook. Now, here's something interesting that we're discussing today, and here's something interesting worth sitting with, right? In the last 5 years alone, millions of first time investors have walked into the financial market, and a big chunk of them under 30. These aren't your tip chasing, rumor following investors of the past. Now, these are people who are building diversified, want to look at more on the global front, tech enabled portfolio. And honestly, the sophistication would surprise you, right? The digital investing revolution isn't just coming, it's here. It's already here, and it's being led by a generation that has never known a world without internet, never known a world without smartphones. So what does this mean for markets? What does this mean for them? Investing, platforms, future of how wealth gets built as well. And that's what exactly we're going to be discussing and getting into today as well. And my guest today is Sambath Kumar, Chief Distribution Officer, who's joining us right now at HDFC Securities. Sambath, thank you so much for joining us on the show, right? And it's a very interesting time that we live in with so many investors who have come in. Gen Zs, as we call it, right? Yeah. They are those generations who have never lived without smartphones, like I was saying. They know everything is at their fingertips now.
Absolutely.
How are you seeing Gen Z investing versus millennial investing? You've been in this industry for a while. What's changed and what's interesting right now?
So I think you nailed it in the introduction only. Let me put it that way. I'm first of all honored and privileged to talk about Gen Z because, we've been there in the financial BFSI space for quite some time, 2 decades, I can say, and been associated with the HDFC Securities for almost a decade, and before that with Reliance Capital as well. So I think we have to give due all credit to them. I think in the introduction also you said very clearly and categorically they are not rumor followers. Yeah. They are elite and naturally sophisticated is what the words to be put to them across. That's what they have done to this industry, if you see. And it's a journey, right? It's an era. It's in 2 decades what they have done. They have put us in toes, the millennials and the previous generation on toes.
They're always on toes. We are always
we are always on toes. And what they have done is disruption. And, I wouldn't call it as a paradigm shift to the industry as such. They are not spared any industry as such. It's not the total BFSI. Yeah. They have reshaped. That's a synonym to put across what they have done. You have to give them marks for that. And of course, there are positives and negatives to both these sides. They are young, they are new, they are dynamic, they are not static, they are always on the run, they are always on the look, they are always well-read, well-fed with information, and they are making complete use of this. When I say BFSI, I think they are not spared the asset management, they are not spared the DMAT holdings, they are not spared the F&O space. I'll definitely happy to share with you a couple of data which is mind-boggling.
Absolutely. I want to know on that because you're saying, right, they've not spared anything. So they're betting on small cap, mid cap, everywhere you look, mutual fund investing, and you look at options. All those data points show that they are here. So what's interesting, what are those numbers looking like right now from the Gen Z
I think you're reading my mind. That much I can say. Let me take some time in reading the data which I got it for you. Since you said F&O, you'll be surprised. I don't want you to make you guess because you will be really surprised or shocked rather. The investors below 30 form 39% as per the NSE data. Okay. Can you just beat this? And 43% of retail F&O traders are your Gen Z. So now you will not be surprised and shocked. All those fintechs, as I always say casually to my friends in the BFSI space, it is this generation which is making all the fintech behave like a bank and all the banks behave like fintech. The credit to them, and this is what the dynamics is, and this is what the investor base is. And today we have to cater to them, and we are definitely catering to them. Also, if you look pre-COVID, 2% was the volume in the derivatives, and the post it is currently 41%, largely driven by the F&O space. We have to give it completely to this generation for what they have done. Also, an additional point before we move to the next question is something my favorite mutual fund asset management industry. If you look at 10 years back, in 2000, end of 2000, end of 2000, end of 2020, end of 2010, the top 10 contributing manufacturing distributors, asset management distributors, are not the top 10 anymore. The entire fintechs today contribute 60%, 70%, close to that kind of, and fresh SIP registrations, fresh AEM mobilization have completely changed. That's a classic testimony to the fact that how the whole industry is reviving and to cater to the needs of this Gen Zs.
Sambath, there's one thing, right? While obviously everyone's more aware, focusing more on financial literacy, but there are some risks also that, as an investor, one should look at, right? Or that self-direct investment that everyone goes through. You have an app and you have everything ready on your apps, right?
Okay.
Is the financial literacy actually going at the level that it should grow versus maybe, the direct investment, which has got some risk there?
So I will partially agree with you and partially say no to you. And I'll tell you why as well. I have my reasons why I'm saying that. Because these guys do take risks. Their risk appetite is phenomenal. The whole F&O is a testimony to the fact that they have the huge risk appetite. What they do and what they shouldn't do, let me just cover those points in a couple of minutes. What they have been doing is certainly very, very right things. In that, today we face a different challenge altogether. Too much information. There was an era where there were a little bit less information. You just need to wait for your newspaper to unfold, and then you wait only. Source is, of course, the studio, CNBC, bringing all the necessary information. That was only few resources. But what internet did to us is also the negative side is the too much information, the too much influences which they get it through the tech savvy, and whether it is your Twitter, whether it is your all that available informations, which they have to filter that. And definitely what they're doing, let us go by data, which is the pivot point to prove what is happening around. If you see the health insurance space, they are mostly grossly 42% of them, as per the latest report by HDFC Ergo, which did a phenomenal report on the Gen Z specifically. They said categorically the observation is 42% of them are covered by their own employees. But the remaining 47% do their study with all their aggregators model. 47%, that's pretty huge. And then they go to their advisor, take the advice, and then they register. So the reason why I'm saying partly yes and partly no is they do know what's the kind of risk. Today they know, they're very much aware of the risks in terms of hospital expenses, which is going phenomenally on double digits in terms of inflation. They're aware of those facts. They know that they need to be rightly covered, but the decision making is definitely not in the right track, which is where I feel that, they should take action upon certain things which they are reading, and also they need to take action upon, like, are they rightly covered considering the inflation, because they're young, 20s, 30s, and they definitely need to take right action. As per the study, they need to go. And they don't believe in, somebody calling them and telling them to push you. That's not their style.
Yeah.
They want to read it out. They want to do it by themselves. That whole do-it-yourself philosophy looks good with them. But there is also the risk factor, which I said that they should really look upon is the kind of influences and influencers. The right influence, I'm not saying everyone is wrong, but most of them have to do their own study, validate it, go through that, make your own decision, and make the rightful decision, speaking to the experts, and then take the right decision. Taking the decision is somewhere that they're still stuck at, and they should do it fast.
Taking decision is important.
Yeah,
right decision is also important.
Absolutely.
The right way also. That's why sometimes you have to, get that opinion that you need, but then
Right.
take the step also in the right direction.
Correct.
That's the word. But there's one thing that also comes in. Millennials used to not maybe call it FOMO, but FOMO now has increased a lot more. During COVID, everyone thought like, I'm missing out on the rally, I'm missing out here. Should I invest in this fund? Should I invest here? And you have the SEBI data that came in as well, right? When we talk about F&O trading, 99% people do not make money.
Yeah.
Are people or are Gen Zs or this generation maybe investing more because of the FOMO? What is your understanding? Is there anything that increases the FOMO fear for them, and that's why, okay, my friend is investing, I'll invest as well?
So let's give some marks to that. You shouldn't be assuming that I'm a big supporter of Gen Z. Definitely I am, but we'll have to give them marks to it. Who didn't do that? Our generation, we all did it. Yeah, our generation did it over a coffee or over a drink. That have you invested? Then I have invested. Have you invested that premises or that apartment? Then I would go and book it. The same thing they are following. The trend is, the behavioral pattern is
just the name is different.
The name is different. So we'll have to give them marks for that. We have, of course, want to call it FOMO. We can call it. I'll tell you why they are very cautious and also diversifying, which is, again, not everyone is doing it, but it seems that they are getting into that direction. Okay. The ETF investments, let's discuss about the mutual fund investments. ETF investments, 35% of ETF investments we saw in the metal rally participated by Gen Z, which means they're diversifying. Right?
I was wondering if the ETFs actually had that much investment,
Yeah,
because
yeah.
surely you're seeing that AUM grow, but versus globally, India has still got a long way to go,
That's
right?
you'll have to take another half an hour. That's a separate topic altogether. Maybe next time we can catch up on that. But I'll tell you something: the ETF, the IPO investments, the ETF, they are definitely diversifying. I'll come to the global investing later side of it. The first to address your query on the F&O side, they are definitely burning their money. That initial phase of post COVID, where people did make money, that did give them that confidence that it's easy. That it isn't easy. If it was easy, everybody would be doing only that. So they will eventually learn that. I also wish that. Everyone is definitely concerned. Nobody wants to see people losing money, especially our Gen Z, who are the pillars and future of this country, and how every household, they shouldn't be losing money. I'm sure they're learning it, and maybe they're learning it, and that's why they're taking the path of different diversification. They just take the path of diversification in terms of investing in ETF, investing in IPOs, investing in global investing as such. The moment I said global investing, another interesting data is 35% of the newly opened accounts this financial year are Gen Z. So they are aware of it. So they know that Hang Seng, your Korean index Taiwan index has performed 276% return has been delivered in the last 1 year. They're definitely aware of what's happening around the world, not only in the country. So that you'll have to give them marks for that. Definitely, cut the long story short, they need to really be concerned about what they're losing money in F&O.
Absolutely. I just want to touch upon that ETF point as well, right?
Yeah.
That's very interesting. While one side you're taking the risk, but ETF is more stable, is what we could say, right? Is there anything interesting in terms of data points that you could highlight for us as well for ETF? The AUM is growing for sure. Retail investor participation, and even the young generation participation that comes in here.
So I'll tell you, ETF as a space, we saw the post gold and silver rally which happened.
Yeah.
We really saw the retail participation significantly growing. We also saw a couple of indexes doing pretty well in terms of the retail participation, which is your defense, your bank nifty, and all those diversified space. That is also invariably dominated by the Gen Z. So even in those spaces, it's the easiest way to enter into capital market. I would suggest anyone, if at all they want to participate in capital market, what would be the first route? If somebody asks me, I'll say that please pick up an ETF and then participate, whether it is Nifty or your futures and Nifty Junior, or your defense sector to be thematic, or a gold or a silver. Silver is something which we would definitely not recommend right now, but 75% of young investors use digital platforms, which means they are definitely going through the platform route and investing in ETF, which is 35%, more than 35% plus, is definitely taking the ETF route, and it is definitely going to take up. We call it as a hockey stick growth. What we saw in US is not very, very far away. As far as the ETF space is concerned, we are already seeing the momentum, the volumes growing up significantly. From here on, we see that there's going to be a huge scope for the ETF as a space, and I'm sure Gen Z will be the one who's driving that as well.
Absolutely. Sambath, I want to understand more on ETF side. There's so much available also, right? You have that AI side. You have so many different kinds of ETFs. Your advice maybe to a first-time investor. You said, yes, look at ETF if you're looking at it and you're first time looking at it. But there's so much noise also, right? So when you're picking up, there's so much information like we're talking about from the start, right? To pick that right information or to pick that right one, what is that advice you would?
So I would definitely say speak to your advisor first. There are multiple questions. See, it's not an open-ended questions. I need to ask follow-up questions to answer to you, but I would definitely like to give you a straight answer. As I told that any investment, if you want to enter into capital market, my suggestion would be the first would be to ETF. And the way market has performed in the last 2 years, we are seeing SIP returns being negative in many indexes. Of course, you can't beat the way benchmark is a reflection. Your performance is a reflection of your benchmark. If they're not able to beat it, the returns are going to be negative. There's no rocket science on that. But you'll have to understand that this time, at this point of time, if I have to answer you straight, then the question, Nifty or the Nifty Bees, which is the well known by anyone and everybody knows. You just need to click along to that and then sail through the journey. That's my first recommendation. And I also say that always go for the gold. the kind of global scenario what we are witnessing, that would always be a safe bet. The whole art of investing is not to lose money. Making money is the second. That's my famous quote. I always believe in that. So touch on that. If you're really ready to take risks, I would say that defense could be another better option on that, or the banking is something they can really look at.
Okay, that's interesting. Thanks for that. But I want to talk a bit more global now.
Okay.
We have while you have those LRS limits, right, that come in from RBI, mutual funds have their own limits that they're supposed to maintain as well. You have Gift City that's come up. But for an investor, just to break it down, right, when you see Nvidia stock spike up, you have individual apps also where you can directly invest in. So for an investor maybe looking to diversify more to global, how accessible is this story? Because a lot comes into play. Your tax comes into play as well. So it's not easy. If an investor who's young is looking to diversify, what should they be saying?
So I don't know if you missed it or not. I did cover that part. The global investing is picking up phenomenally. So I'll just give you our own example. The HDFC Invest, right? We did do an amazing campaign in terms of SpaceX listing and all that. There were a lot of queries, people coming and asking, what exactly is this? How do we participate? We definitely found, and we did have a tie-up with an external partner, and we are offering that through our platform as well. And we could see on one single day, close to 3-day campaign we had 18,000 clients coming and asking about it. Of that, close to 20-30% were your Gen Z.
Yeah.
So they do know the kind of Twitters, the kind of messages floating around and articles floating around, Elon being a trillionaire. Everybody gets excited and everybody wants to participate. Nothing wrong about that. To answer you straight, yes, we do have platform. We are seeing significant enquiries coming and asking about it, and many people are participating it already. We have close to $400-500 million of AUM already in that particular space. Yeah, and as I told you, 35% already who has opened the account and started operating. They're way ahead. They saw the SpaceX IPO coming in maybe a year back. They're already participating. I'm sure they will make use of this opportunity.
How are you seeing AI evolve in platforms, and how much should, an investor, maybe you have AI giving you advice as well today, right? So AI with platforms and investing, how do you see that?
All three will coexist.
Will coexist.
If I have to give you the shortest reply, all three are going to coexist. Let's not forget that AI is definitely going to storm, and we are seeing that already. The analysts used to sit in for hours, attend the call, and that just a couple of 10-15 minutes away, you just get the entire summary, you get the bullet points. So it's making life easier and harder both. We all know that. So definitely we'll take the easier option. They're going to exist. And we also see that including Gen Z, who inquires about the insurance policy to the lot of aggregators, end of the day 40% go to the advisors and then take the route. So that's why I said that the advisors are going to continue to exist, the platform is going to exist, and the AI is going to exist. I think I'll put it in 3 P's maybe. P for product, P for process, and 3 for platform. All three are going to exist.
That's a great one. Product, process, and platforms. All three will exist together.
And of course, the fourth one is the people, which is the most important thing.
Absolutely.
They're definitely going to be there. If you're going to be worried, no, will AI replace? I'm not. It's only going to enhance your capabilities, and you just need to prepare yourself, and you need to adapt yourself to take it to the next level.
Sure. Last one.
Yeah.
If an investor is looking, Gen Z investors watching us right now, what is that one important advice that
consistency? I'm so glad you asked that. I'm so glad you asked that, because you should not go. They should not get a picture after seeing this interview. They're doing everything right. One thing, they have been doing a mistake. They are humans. They are supposed to do mistakes. We are supposed to correct them. One thing they are, what they do is the FOMO effect. They just follow it, and then somewhere they lose the conviction and move to the next story. They should not do that. Consistency, whether it is health or wealth, losing weight is the most easiest thing, but why not everybody could do it? The lack of consistency. The same applies to the wealth. The number of SIP investments, your long-term investments are continue to going to remain there. If you're not going to be consistent in your participation, I think that's one thing they'll have to work on it.
Consistency is key.
Yes.
Health or wealth, and timing, the market is not the right thing.
Time
in the market is a better thing.
Time in the market is a better thing, always.
So keep that consistency going. But Sambath, thank you so much for joining us.
Pleasure.
On Prime
It's absolute
Playbook.
pleasure. Thank you so much.
Great conversation. And thank you so much, viewers, for tuning in as well.